the Exchequer says he knows how to make it happen, blacklist countries that aren't transparent enough. We're going to be talking to Alistair Darling. Plus, the banker who won a Nobel Peace Prize. We're going to talk microfinance with Mohammed Yunus. He is here for the Clinton Global Initiative. And charges of insider trading involving Dell's takeover of Pro Systems. The SEC says one man made millions of dollars. In the meantime, in this hour, we're watching the markets, and we're also watching those weekly jobless claims numbers that are just coming out in about half an hour's time. Equity futures are mixed, as you can see, ahead of that data. For treasuries, they've also been kind of bobbing up and down, and in fact, the 10-year is up, but the 2-year is down. You've got an auction of 7-year notes later this morning. For the dollar, it is weaker right now against the yen and also against the euro. Well, the Fed has decided to leave interest rates at zero, no surprise, while policymakers wait to see whether the economy continues to improve. Now, they won't have very long to wait. Bloomberg economics editor Michael McKee is here to set us up for today's data on the economy. Michael.
Well, Betty, today's big number out at 10 Eastern is existing home sales. They were the boat anchor of the recession. Now they may be the buoy. Sales are forecast to have risen 2.1% in August, the 5th straight monthly increase after almost 2 years of decline. That would put us at an annual sales pace of 5,350,000, the best since August of 2007. Well, one thing economists will be watching closely is the supply of homes on the market. It had been stubbornly high. People saw sales improving, put their homes on the market, leading to a glut. But the last 2 months, it's been coming down, and that should be good for prices. Well, more data of note, jobless claims. You mentioned that, Betty. This out in about 25 minutes from now. They're forecast to show the labor market still struggling to gain traction on a week-to-week basis. Claims up by 10,000 last week. Overall, though, continued improvement in the total number of people collecting unemployment checks. Since claims are still high, though, that may be because long-term jobless are simply exhausting their benefits. We'll have the data for you at the bottom of the hour.
Okay, Mike, thank you. That's something we've been watching for. In the meantime, I want to get to Suzanne O'Halloran at the New York Stock Exchange, who's looking at the impact of that data, but also a call from Morgan Stanley. Suzanne.
Well, that's right, Betty. You know, it's been a little bit of a confusing morning. Of course, we are waiting for that economic data Mike just told us about. But we do, of course, have the Fed saying yesterday that the U.S. economy is improving. And today, Morgan Stanley strategist Jason Todd agrees with that. He lifted his forecast for S&P earnings nearly 8%. However, here's the catch. He says stocks are fairly valued. His target for the S&P is about 1050. That's literally right around where we closed yesterday. So that's the view. Stocks probably have priced in, according to Morgan Stanley, really what we're seeing in the economy or expecting to see in the economy according to what we heard from the Fed yesterday. So stocks futures modestly higher, but we've really been all over the map already this morning. So again, economic data at 8:30 and 10 will be extremely key today. Adding to the confusion, we have a mixed call on housing today. Goldman Sachs says housing valuations look good. You should buy the stock. They also say there may be an extension of that one-time credit for first-time home buyers. Then we have Citigroup, Betty, saying valuations are stretched. So again, a lot of confusion around some of these cyclical sectors like housing. That economic data should help clear things up later today. Back to you.
Okay, Suzanne. Well, world leaders meet today in Pittsburgh looking to retool regulations on a scope not seen since the 1930s. They're hoping to avoid a future financial crisis, but the question is how. Now, Bloomberg's Peter Cook is covering that summit for us in Pittsburgh. Peter?
Well, Betty, good morning from Pittsburgh. As the financial crisis eases around the world, there's less pressure on G20 leaders coming here to Pittsburgh to take bold action. That puts in doubt some of the earlier commitments to overhaul financial regulation around the world and rein in the banks and bankers accused of causing the crisis in the first place.
5 months after their last meeting in London, and with billions in taxpayer-funded stimulus still sloshing around the world, G20 leaders come to Pittsburgh able to claim success in stemming the worst global financial crisis since the Great Depression, even as challenges remain.
Across the globe, we find promising signs, but little certainty about what lies ahead.
Critics say one reason for that uncertainty, the G20 has so far failed to agree on financial regulatory changes that could prevent a repeat of the crisis.
These financial systems that broke down have to be made safer again, and very little progress, as you know, has really been made on the ground in the United States or in Europe in that regard.
At the Pittsburgh summit, the U.S. will push to raise bank capital standards and limit leverage as buffers against future losses, a threat to bank profits around the world. European leaders worried their banks will have a tougher time meeting new targets disagree on the details. Meanwhile, Germany's Angela Merkel's and France's Nicolas Sarkozy's push for the G20 to further limit banker pay faces resistance from the US and UK.
The question that causes a problem is whether to create a global cap on the amount of bonuses.
Amid tight security in a city not used to the international spotlight, the G20 leaders will also discuss how to sustain recovery while pulling back all that stimulus. And they will consider a U.S. proposal to create a new framework for balanced economic growth, a voluntary effort to reduce global imbalances like China's trade surpluses and America's own rising budget deficits.
There will be a lot of talk about that framework going forward. Also talk, Betty, about protectionism and a possible agreement to give developing nations more of a say in how the International Monetary Fund is run going forward. And again, skeptics here wondering if all those G20 words actually turn into actions. Betty?
Right, that's right, whether the execution comes out. Okay, thank you, Peter. Well, ahead of the G20, the UK has laid out its own battle plan. UK Chancellor of the Exchequer, Alistair Darling, spoke with Francine Lacroix. And Francine, he says he wants to blacklist countries whose regulatory systems aren't transparent enough. But how will he make that list exactly?
Good morning, Betty. Well, in terms of what he said, of course, the details still need to be ironed out, but the Financial Stability Board will be in charge to try and find a solution to put this list together on certain criteria. Now, what Alistair Darling told me is that Britain actually wants to extend the G20's efforts to standardize taxation, bank rules, to also those countries that have a poor record overseeing institutions. And it's actually the countries that have also allowed wealthy people to hide cash.
What we're saying to these countries, look, you live in the same world as the rest of us. You enjoy the privileges when you travel that everybody else does. You can't have it both ways. You can't shelter behind this veil of secrecy where we can't get information that we need to understand the risks to which some of our institutions may be exposed. We simply cannot allow that to continue.
Now, Betty, these measures would target countries such as Panama, the Dominican Republic, but also the Caicos Islands. And these countries already figure in a list put together by the OECD. This is a list of the countries that haven't implemented international tax standards. So let's see if the UK can push this through with the G20 counterparts.
Okay, Francine, thank you. Francine Lacroix. Well, news out in just the past hour. According to the World Health Organization, there's not enough swine flu vaccine for everyone. The WHO said this morning that manufacturers can produce about 3 billion doses of swine flu annually, but that is less than previously estimated. Now, as we move into the fall flu season, there are also some concerns about the impact swine flu could have on the economy. And Bloomberg's Lindsay Ahrens has been tracking that data, and she joins me now from Washington with those details. Lindsay?
Well, Betty, the threat of a severe flu outbreak like the one the WHO is warning of could really have a serious impact on the U.S. economy, as you mentioned, and to the effect that the Obama administration has been planning for a worst-case scenario. They released a study that says it is possible 30 to 50% of the U.S. population could become infected by the H1N1 virus, causing, listen to this, 30 to 90,000 deaths in this country alone. Question is, what does that mean for the economy? We looked at a ton of data and economic modeling. According to one study, a severe pandemic flu outbreak could cause a 5.5% drop in annual GDP, costing the U.S. economy an estimated $683 billion.
Certainly in the worst case scenario, people are going to pull back from their social interactions and will pull back from travel, will pull back from shopping, going to entertainment, that sort of